Hey guys, this problem is an allowance for bad debt, and it's asking what's the adjusting journal entry to record bad debt expense, and the journal entry is always the same. It's debit, bad debt expense, and credit the allowance for bad debt. The hard part of this is the dollar amount. And so that's really what this problem is kind of asking about, is we know the journal entry, but what's the dollar amount to record that? And whenever I do this, there are two accounts you should be analyzing. We should be analyzing the accounts receivable and the allowance for bad debt accounts. Now, the accounts receivable is an asset account that appears on the balance sheet. It increases on the left with the debit and decreases on the right with a credit. It has a beginning balance. It increases with credit cells. So sales that are made on account, and the only way it goes down is if a customer makes a payment on their account. So cash collections, and then it can also go down if we actually write off an account. And we would do that because a customer hasn't paid us, but they're never going to pay us. They filed for bankruptcy or something like that. So that will give us our ending balance. The allowance is a contra asset, which means it still shows in the asset section of the balance sheet. But contra means opposite. So it has a credit balance and increases on the right and decreases on the left. And so it has a beginning balance, and on the right, it increases by, we saw over here the journal entry. When you record bad debt expense and credit allowance, that is the journal entry. So this is whatever you record in bad debt expense is being recorded in the allowance account. And this is our estimate of what we think people aren't going to pay us. Whereas the other side is the actual what we actually write off. And that will give us our ending balance. So what I want to do is take the information that's given to us in this problem. And I always start by just inputting everything that's given to me and then see what it's asking. So here we're given cash sales for the year. We don't care about cash sales for the year because that's not impacting accounts receivable or allowance. If they paid us, it's not on account. We are worried about credit cells for the year, and so the credit cells for the year are 3,000, and beginning allowance for bad debt is 100. So let's enter in those two things. So credit cells for the year, where 3,000 and the beginning allowance was 100. They also give us write-offs during the year were 80. And ending accounts receivable was 800. So I'm going to put the ending accounts receivable is 800, and they gave me write-offs during the year where 80, which goes right here, and write-offs go here. Because you could see here, this is the same number, and that's all the information they give me. So you can see I'm missing a lot of things. I'm missing the beginning, I'm missing cash collections, I'm missing allowance for bad debts. So there's a lot of stuff that's unknown here. But it tells me that they account for allowance for bad debt. And now to figure out what this allowance for bad debt is. This is the number we're looking for. To figure out what this allowance for bad debt is. This is the number we're looking for. It depends on which type of method they're using. And they tell us that the company uses a percentage of accounts receivable to estimate that ending balance in the allowance account. So although they haven't given us everything, they've given us what we need to know because it says they use the ending balance of the accounts receivable. They estimate 7% is going to go bad. So really the only number I need is this number out of accounts receivable. And they're saying we're going to use an ending balance sheet account to estimate another ending balance sheet account. This is the balance sheet approach, or the indirect method. So I'm going to take that 800 and multiply it by the 7% that they're estimating, and that will give me 56. So what they're saying here is there's 800 people owe us, but we think 56 are not going to. We won't be able to collect 56 of that. So we need to indirectly work back and solve for X here to say, well, then what does my journal entry need to be so that I can report that on my financials? So I'll just do algebra here, and I'm going to add on the right and subtract on the left. So I'll start with 100 plus X minus 80 equals 56. And so now I can just solve for X. And when I solve for X, I get 36. And again, you can just check your math. Here is 100 plus 36, 80. Does that equal 56? So when it asks, what's the journal entry I gave you? The journal entry and the dollar amount is 36. If you found this video helpful and would like to see the next educational videos, Please subscribe and give it a thumbs up.